and we'll have this posted. We'll have this posted in the server by tomorrow morning. So welcome. Thanks for being here. Appreciate it. I'm sure we'll have a few more stragglers coming in here, logging in as they can. As I said, it's I know this final hour of trading, depending on how someone did here today, someone may be trying to take advantage of the end of the day here. Interesting. It's been an interesting day in the markets, hasn't it? We had a great day trading here in the live room, and we'll take a quick review of that in a little bit. But I've got a wide-ranging subject matter for today. Let me get the post up. And as promised, really just want to have a nice in-depth chat with everybody who can make it here. Raphael just joined us. Great to see you here, Raph. So again, what we posted here in the event details, discussing my trade plan, my business trade plan, managing emotions, proper use of leverage, risk management, all of that, along with some insights into our proprietary G-level work and so much more than that. So again, guys tend to, we still got guys filtering in, so I appreciate that. It's great. I also posted a little while ago here in the public channel, what is it that you're struggling with? Think about that as we chat. What is it you're struggling with? Are you trading prop accounts? Can you get past, most traders have no problem getting past eval. They get to funded status, practice account status, whatever you want to call it. They can't maintain that. They can't get to payout status. They can't maintain payout status. What about knowing where and when to enter high probability targets? What about staying patient and disciplined? And I asked a question, any of that sound familiar? And I'm sure it sounds familiar to almost everybody. So I'd like to have a nice participation, open format. Yes, 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 yes. I love it. Matt, I appreciate the honesty. I really do. Listen, there's no point in anybody on either side of this discussion in this business. There's no point being BSing anybody. I'm not going to BS you. You don't BS me. Let's be honest and forthright, and let's talk about, trading is not easy. Uh, it's just not, and it's different for everybody. It's difficult. Okay. Sizing of contract issues with micros. Excellent. So again, I appreciate your candor, your honesty, your openness. I would love to see questions, comments. I want this to be a trading discussion. I'm here to, share some insights with you, share my experience, talk about some things that work, talk about some things that don't work. But, I've had a lot of confidence to reach 9K goal, very difficult for me. Well, yeah, 9K goal. What is that? A 9K goal. I'm going to assume that's what, a 250 or a 300K um, account. 300K probably. It's got to be like a 300K, right? So, that's a great point. So, we're going to talk about that. Again, how to get there, how to stay there, right? Because getting where you want to go. Now, again, I've got people here who are trading cash, trading their own money. I trade my own money. I trade some prop accounts. I trade both. Um, I've started doing something here recently for my kids, right? Um, and so I get it. In case many of you know me, some of you do not know necessarily everything about me. But I am, let me just give you a quick background and then we'll get right into the nuts and bolts. I mean, there's so much to talk about. 1 hour is just not enough time to talk about all the issues and the various subjects that we could touch on in trading. So I hope to make this the beginning of a series. Really, since we started GTraderPro Discord community, this is really our first live public webinar. I hope to make it a weekly or bi-weekly series and continue on the conversation. So we will record these, we will post these. This will be an ongoing series for our people. But I'm 64 years old, for those of you who don't know. I'm 64 years old. I may sound a little younger than that, but trust me, I'm 64. I'm every bit of 64. I started my career in financial markets at the age of 26. I've been at financial markets for 38 years. It is the only career I have ever had since the age of 26. Prior to that, I was in the restaurant business, in the restaurant industry, managing the liquor side, the booze side of a restaurant. 1986, I was recruited, if you will, for lack of a better term, recruited into the financial services industry. And I was there. And then ultimately, I've been self-employed since the age of 30. So I've been self-employed for 34 years, relying on nobody but myself for an income. So I know a little bit about markets from every vantage point, really from a very high level to a very low level. I know what it's like to rely on myself for an income and not rely on anybody else for an income. I know the pressure then of having to produce. I've had to produce for my family for 34 years. And so again, I'll keep that fairly simple. I've supported my family through my business and through trading. I continue to do so, and supported both not only my kids but my parents. And that's it. This has been my life. Markets have been my life. It's not something, no disrespect to anybody here. It's not a side career. I'm not a first responder. I'm not a software guy. I'm not a hardware guy. I've not been in the tech business. I'm not a plumber. I'm nothing else. This is all I have ever done. And I have been self-sufficient since the age of 30, and I'm now 64. And I like it that way. It is not easy. I appreciate the comment. It is not easy, but I would rather be dependent on myself. That's my personality. I'd rather depend on myself and nobody else. And, uh, you know, I don't know what's coming in next week. I don't know what I'm going to make next month, but I know uh, the responsibility is all mine. When you work for someone else, you know what your pay is, but you never know, from day to day or week to week or year to year, whether you have a job or not, right? I figured out a long time ago, I'd rather rely on myself and not know from day to day, week to week, month to month, year to year, what my income's going to be, but I wanted to be self-sufficient and solely responsible for that. Okay. And that's what works for me. I've had my demons. You all have your demons. We all have our demons in life and in trading. And so many of them are so critical. I do want to spend quite a bit of time here today talking about what we love to call our demons: patience, discipline, fear, revenge, right? Oversized trading, emotional capital. Mark, appreciate you being here, first of all. All of this we can have, as I've said to many folks in our Discord community, some of the individuals here that I've trained on the G-level technique. I have spoken to many people here, and I have said over and over again, you can have all the technical knowledge you need, and you don't need a lot, but you can have all the technical insight and knowledge about the market that is needed to be successful. and still fail miserably. Heck, I can put a trade right there on a silver platter for you, tell you exactly where to buy it, where to sell it, where to put your stop, where to put your targets, and somebody is still going to have a problem with that trade. And that's because beyond the technical knowledge of understanding markets and price action or price, anything to do with markets, beyond knowing the technicals, you have to be able to manage the non-technical side of trading, the emotions, the mindset, right? Patience and discipline, patience to wait for the right setup, discipline to stick to a trade plan, discipline to manage risk, patience to let your winners run, right? Having a trade plan, having a business plan, executing that plan, sticking to it, being accountable. I'll share a little bit of personal insight with you. Again, I'm married to a great woman. I've been married for 43 years. All to the same woman. 43 years. We got married very young. It's by the grace of God. We've gotten through a lot. And I've had tremendous support in trading. Trust me, I have failed at this miserably over the years. Very few people can probably say they have failed in trading as bad as I have. Trust me when I tell you that I'm not shy about saying for a long time I did a horrible job at trading. But I had someone willing to believe in me and stick by me. And I knew that I would ultimately master not only the technical side of trading, but my emotional demons. But there were times where I didn't feel like I had anybody holding me accountable. And when I not only developed a business plan, but I plugged my spouse into that business plan and had accountability to that business plan, things really clicked for me. All right. So, the business plan that I do want to touch upon, everybody's got some type of trading plan. First of all, does everybody here in the room have some type of what you would honestly call a trade plan? I don't mean, hey, I trade 3 contracts, this. I mean a real trade plan, meaning, when you come into the week, all right, what is my maximum loss? I don't like to limit my upside, but I absolutely limit the downside. I think we all have a daily loss limit. Do you respect that daily loss limit? What is it based on? So let me just share a little bit of insight with you. Okay. So when I come in, I treat every week like a blank sheet of paper. Okay. Um, I found that for myself, starting on Monday, ending on Friday, thinking about my trading on a weekly basis as opposed to a monthly basis was better for me. So when I come into the week, as traders in the room know, I like to, what I say, ease into the week. It's very important for me mentally, psychologically, emotionally. I need that first trade of the day, first trade of the week. I'm in a better position when I start out with a really good trade. So I tend to ease into the week on Monday and again, take it relatively easy. I don't over leverage. I don't oversize. It's just important to me psychologically to get back in the groove after the weekend off and get something on the board. All right. I think in trading, dollars ultimately will take care of themselves. You got to come into trading and not worrying about how much money am I going to make in this trade? How much money am I going to lose in this trade? That's the wrong approach. You start thinking about money and you start trading money. And I understand we're all trading an account. We're trading money. But when you approach a trade, don't approach the trade with how much am I going to make or how much am I going to lose? It's what is the trade? Where's the entry? Where's the target? Where does the stop need to be? And we all, of course, know those 3 facets, those 3 components very well. Uh, but how do you approach them? The majority of the time, a trader will approach the trade. Let me ask you a question, everybody, with a show of hands or just chime in, type in. Do you find yourself taking the entry, first saying, where am I going to enter the trade? And then look for your stop and the target? How do you put those in order? I'm just anybody who wants to type in entry, target, and stop. How do you think of them in order? Or do you just enter on an ATM and say, hey, I'm going in, I'm looking to make 6 points, risk 6 points? Just curious as to how you approach a trade. And then I'll tell you how I approach a trade. But we have three components to a trade: entry, stop, and target. ATM all preset, entry, stop, and target. Okay. Entry, stop, and target. Thank you, David. All right. Stop loss, entry, and target. All right. Thank you, Raj. I think first about target. All right. I tend to think first about where is the market going? What is it like right now? What is it trying to do? Where is it trying to go? All right. How can I get on for that ride? So I tend to first, think about the reason to be in a trade. If you find yourself saying, hey, I want to be long at 64.85, why? Why do you want to be long at 64.85? What's the purpose of getting long in the S&P at 64.85? Is it to say, hey, let's see if I can get 2 points out of the trade, 3 points out of the trade, make $100? Is that the reason to be in the trade? Or is the reason to be in the trade is like, hey, the market is trying to reach 64.95. It's trying to touch that price. How do I know that? I'll show you in a minute. But it's trying to touch that price. So if I believe the market by firming here is trying to get here, then where can I get in for the ride? Oftentimes in the room, I talk about it's like jumping on a bus, right? Or taking a train. If you're, living in uh, a urban environment, and you're sitting on Main Street and you need to take the bus, do you just get on a random bus and say, hey, I'm going to jump on this bus and see where it goes? Am I just going to go long at 64.85 and see where it takes me and take some money out of that? Here comes 64.95, right? Or do I say, hey, I need to get downtown to this particular location and I know the bus I need to get on to get there, right? So I tend to think about the reason to be in a trade is for the market is going to attempt a price. I have a way of knowing what the price is that the market wants to go to because of what they've done previously. So I can sit here and say, hey, the market's trying to get to 64.95. That's my target. I believe that's where the market's going. Where can I get in for the ride? And where should my stop be if I'm incorrect? So a stop for me in my trading plan is twofold. Yes, stops are there to limit your financial and your capital loss. But the true placement of a stop is first and foremost what price tells me my thesis is wrong. If I believe that by firming up on 64.81 that the market is about to run to 64.91 and 64.95, where am I wrong? What price should the market not go down to if I'm correct? And that's where my stop needs to be. My stop needs to be below a price that would tell me my analysis is incorrect. And therefore, then, where my stop needs to be, for those of you who said, over leveraging, For example, if I say, hey, the market's pulling back here. Now, somebody messaged me. He's not here in the room. He's not here in the webinar, but he messaged me a little while ago. He's one of our trained members, and he got long at 64.81. And he told me his price target. And he said, what do you think? And I told him where I believe he should take his exits. So he got long at 64.81, and I told him to take his first exit at 64.90 and then get out in front of 64.95, because 64.95 should be difficult for the market to get past. Now, maybe it will, but it's a difficult level to get past at 64.95. So I said I would be flat before the market reaches 64.95. It should attempt it, but I would get out in front of it. And I take my first exit at 64.90. Now, there's a reason for all that. But in framing out this trade, if you and I framed out this trade together and said, hey, we're going to go long at 64.81, right? Based on what the market is doing, 64.81 is my entry. My stop has to be, where am I wrong? I'm targeting 90 to 95. And if I say that in order to be correct, the market has to stay above 77, my stop is going to be below 64.77, because if the market breaks below 64.77, then there's no trip up to 90 and 95. The premise of this long trade is that the market has to stay above 64.77. So when I first say, okay, the market based on the price action should go back up to 90 to 95, I want to buy 81s. My stop is below 77. That thought process tells me how many contracts I am going to put on. If I have a 4-point stop, I'm going to size my position accordingly. If my max position is 10 micros, I have to ask myself, can I live with a 4-point stop on a 10 lot position? If the answer is yes, then it's an appropriate use of leverage. If I do the math and I go, well, that's, 200 bucks. I don't want to risk 200 bucks, but that's where my stop has to be. Then I can't put on a 10 lot position. I have to put on an appropriate size based on what I'm willing to risk to be wrong. The stop has to be 77. And so when I frame out that trade and I put my position on, and I put on my 10 lot position, I have to honor my stop. I cannot add to the trade at 75. I can't scale in at 73 when the trade's against me, because the trade is wrong. The premise of the trade is completely blown. Make sense? And so I determine my size. I don't go into every trade with the same size position. You size your position based on where that stop needs to be. Most of traders will put on their position and then think about their stop. It's too late. You've already put on your position, right? Before you size that position, you have to know what you're risking and where that stop needs to be. Where am I wrong? What's my target? Where is my trade? Where does my trade go wrong? And I have to honor that stop. If you can't do that, then you shouldn't be in the trade in the first place. But that is part of that. Again, that's part of having a trading plan. So I got a little off subject, but I ease into my week on Monday. I think about my trading Monday through Friday, and it's just like the market. So I want to ease into the week and I want to get on the upswing. I know there's potential for pullbacks. All right. So I tend to be conservative with my sizing when I start the week on Monday. I try to get positive early in the week. I build on that Tuesday and Wednesday. I get a little bit more aggressive with what I'm doing. And by Thursday and Friday, I become much more defensive about protecting my week's gains. I mean, let me ask you a question. How many times have you been having a good week or a good month? And lo and behold, late in that cycle, you give it all back in a day or two, or you give it all back in a trade. Let's face it, we've all done it. We might as well admit it. We've all done it. We've had been on a great swing, and then we give it all back. So my mental approach to trading is I manage the week just like a chart. All right. And I want to ease into it and I want to get on the up cycle. By the time Thursday comes around, if my week is almost complete and I'm satisfied with what I've produced, I become extremely defensive and protective. I may not trade at all on Friday. I may trade very little on Thursday. I'm going to be very selective and scale back the size of my position. There's no such thing as playing with the house's money. It's your money. You've worked hard for it. Why give it back to be demoralized late in the week on a Thursday afternoon or on a Friday after you've had a great Monday, Tuesday, Wednesday? We've all done it. Stop doing that. All right. So, part of a business plan, and again, we can't get into all of it today, but having a true business plan is managing the week. All right. I don't believe that a trader should look at one of the problems with monthly payouts is you have a whole month to hang yourself with, right? You say, oh, it was a bad week. That's okay. I have 3 more weeks to go. Or, you're 2 weeks into the month and you still have 2 more weeks to go. And you have a setback and you say, that's okay. I still have 2 more weeks to get it back. That's the problem. Shorten up your horizon. Think about trading for the week. And let's just have a successful week. And let's think about getting on the right path early in the week, build on that profitability. If you have a bad Tuesday, okay. But we don't want to have a bad Thursday and a bad Friday. Now, the next thing about a business plan, all right? How many people here know what their average winning day is? What's your average profitable day? $200, 150? I don't mean what's your goal, but what is your average winning day? If you don't know what your average winning day is, you should. You should track. What's your average winning day? And the reason you want to track your average winning day, let's just say mine's 350 bucks. My average winning day is $350 a day. Then I never, ever, ever want to risk more than 2 times that in one day. My daily loss limit is 2 times my average winning day. Therefore, if I have a bad day, I might give up 2 days worth of wins, average, but I never give up more than that. I can still come back during the course of the week. And if I've had a winning Monday, Tuesday, Wednesday, Thursday, then I'm only giving my risk is 1 day of that average so that I can go home positive for the week and take my paycheck. I'm telling you right now, if you're going to rely on this business to cash a paycheck, then you have to protect that paycheck. How many of you who work for a living, work for somebody else, would go into work on Monday and just at the time you're about to collect your paycheck, how many of you would tell your employer, hey, don't pay me this week or don't pay me for the last 2 weeks? Keep it. I want to give it all back to you. Would we do that with our employer? It's a facetious question, right? Nobody would say to their employer, don't give me my paycheck. but yet we're willing to do that when we trade. Why? Why are we willing to do that when we trade? You have to develop that mindset of you are responsible for yourself and your paycheck relies on you. Why would you give up that paycheck at the end of the week? If you can work it on a monthly basis, God bless you. Some traders look at it on a yearly basis. Professional traders, we don't make money every day of the week. We don't try to make money every day of the week. It's about where are we at the end of the cycle, right? So let that sink in, especially the part about, hey, would you tell your employer to not pay you at the end of the week or the end of the month, however often you get paid? I mean, how ridiculous is that? We wouldn't do that, but we do it with trading. So again, you have to start thinking about being self-employed, run this like a business. This is not a game. This is not monopoly money. And let's face it, if you're trading a $50,000 account or a $100,000 account or a 150 account or a $300,000 account, we all know that that number is baloney. You don't have a $50,000 account. You don't have a $150,000 account. Your account size is your drawdown. If you've got a $2,000 drawdown limit, you're trading a $2,000 cash account. If you have a $6,000 drawdown limit, you have a $6,000 cash account. Do yourself a favor and put 6 grand in a real account and try to imagine how you would trade your hard-earned, even better. Let me give you $6,000 to put into an account. You're responsible to me. You're accountable to me. I'm going to give you 6 grand to put in an account. How are you going to trade that? I don't care about how fast you win. I care about consistency. I care about progress. I care about slow and steady. I don't care about setbacks like this. I care about this. We're all going to have setbacks. We have to manage those setbacks. I care about is the account going lower left to upper right. This is your trade equity. This is the equity in your account. We're going to have pullbacks in our accounts. It's how you manage those pullbacks that makes all the difference in the world, right? So there's just a little bit of insight into, again, I don't have a magic bullet for managing emotions. I just know that at some point in time, you have to give yourself a structure. You have to give yourself some accountability to have discipline. Now, there's other ways to do it, but you start by having some semblance of a business plan and make a commitment to yourself to honor that commitment, to honor that business plan. There's a big difference between managing an account to see it grow or to have some extra cash on the side versus, hey, I need to pay the bills. And trust me, that's a monkey on your back you have to get used to. It's not easy to say, hey, listen, I need this to pay the bills. That mentality, that thought process, that pressure can make for really bad decision making. And so you have to have a structure. You have to have a game plan. You have to have a coach. You should have a mentor to keep you honest and to keep you on track. All right. So that's, again, just some food for thought. I don't have all the answers in one day to sit here and say, hey, I'm going to give you something that fixes it all. Okay. I can't fix everybody's problems in an hour. I can't fix everybody's problems, period. I can only share what has worked for me. I've been at it for 38 years. I'm still here. I'm still doing it. And I found what works for me, and I have helped others to find what works for them and to get onto a proper footing and a proper path. Now, a little bit more. Thank you, Mark. Again, it's food for thought. These are things just again, trading is a lonely business. You're all, people ask me all the time, why do I do this? Not why do I trade? You know, years and years ago, I got a little bit depressed, trading for simply trading for my family, trading for an income. It's a lonely business. Um, very few people understand what we're going through and what we deal with. But more importantly, I felt like I had nothing to offer the outside world. I sit in my office, I trade, I have trading friends, obviously. But one of the reasons I enjoy doing what I do now is because I'm trying to help others. And I'm trying to help others be successful and not have to go through all the pain that I went through. And there's a lot of garbage out there. There's a lot of junk that just doesn't work. Everybody's interested in selling you something, whether it's a course or an indicator or all these things, and the majority of it just doesn't work. There are things that work. There's knowledge that one can have. But all that aside, all the technical knowledge in the world, including my own GLevels technique, you can know it, you can understand it, and you can still fail with it if you don't manage the mental and the emotional side of the business. It is a business. This is not a game. This is not make believe. This is not Monopoly. And you have to understand that, and you have to come into it every day, respecting all of those things, for lack of a better term. All of those things have to be respected. Okay. And it starts with having a good, high quality trading plan and focusing on it day in and day out and staying true to it. If you find that you've developed that good, hard business plan and you have the good technical knowledge, you understand where if I'm going to be long at 81, trying to get to 95, and if you find yourself not honoring your stop time and time again, if you've got it all laid out, your stop is in the right place, and you just are not honoring it, you need to stop trading forever. If you can't fix that problem, if you find yourself not honoring the stop, scaling in to a trade that is wrong, and there's a big difference between a trade that is wrong and a trade that is in drawdown. And I'll show you a little bit about that in a minute. We took some trades yesterday and today that were in drawdown, and I added to those trades. But it was part of the plan before we started the trade. There's a difference between saying, hey, listen, I'm going to buy 81 and I'm going to buy 77 and I'm going to add to it at 75 and my stop is going to be down here at 71. That's a big difference. I've already laid out my decision making before I ever started the trade. I did not put on a full position at 81, max position, and then add at 77, and then add at 75. I went into the position with my eyes wide open, saying, no, I'm scaling into this trade here, here, and here, and my stop is here, and I have to honor the stop. There's nothing wrong with that trade. There is something wrong with saying, listen, I'm going to scale into the trade, but all of a sudden you put on a full position here at 81, and then you add more here. Now you're over leveraged and you're in bigger than you're supposed to be. And then you hit your stop and you're dead. There's a big difference between adding to a trade that's in drawdown and adding to a losing trade. Right? So let me ask you a question. If I'm willing to go long at 81 and 77, and let's just say for argument's sake, guys, that my stop is here at 72.50. So there's my stop. I'm buying here, I'm buying here. Okay? This is my stop. What's wrong with adding to that position at 74 or 75? Because I have very little risk if I put a hard stop on that trade. If I buy 75 and my stop is 72.50, I've got very little risk with that added position compared to I'm nibbling here at 81. Let's say my max position is 10 and I put on 5 here and I put on 3 here, and I put on 2 more down here. I'm scaling into that trade. I'm still going to honor the stop. But with my added positions, I have very little risk relative to my starting position. Now, if you start here with a full load and I've got 10 lots on at 81, I certainly cannot add to it. I'm dead. How many people add to a trade right in front of their stop? Very few, but there's very little risk to adding as long as you're going to honor that stop. All right. You have to have the discipline to honor the stop. All right. So there's some, again, just a little bit of insight as to, again, there's a time and a place to approach that trade from a scaling in perspective. Many times, hey, we're in at one price. Sometimes, like yesterday, we scaled in. Like today, where I scaled in. All right. Now let's take these lines off. Let's talk about some of the technical. And you feel free to throw out any questions. Again, I'm here for you. I love to hear from traders and understand what's on your mind. What are issues and questions? What, again, not only what do you struggle with, but what other issues and questions can I address here today? So let's talk about the technical side of things for just a little bit here. All right. For those of you who might not be familiar with our G level work, many of you are, some of you are not. All right. We scaled into a short trade right here this morning on the rally up. We knew that 64.95 is a very difficult level for the market to break. All right. A true price level, for those of you who don't know, a true price level, not just a price in the market, but a price that is meaningful to any index or any commodity is going to have 2 qualities to it. That price is going to first be magnetic. The market is going to get drawn up to it, and then it's going to reject it. So we shorted the market up here at 64.95. We we shorted initially up at 88, 87, 88, and we added to that position up here knowing that the market was putting in an important conclusion to the rally, a top, and that time had run out for the upswing and that it was running into a critical price and that the market would drop down. This is what it looked like. All right. For those of you who have not seen the G level ultra indicator, how could we know that failure in this area would lead to the market coming back down to this area? Right? This is how our G level technique works. So we shorted this advance as we came up to 87.88 and we shorted all the way up to 95. And then we caught the trade on the way back down to what we call our pivotal level here at 64.80. And then on the way back down, we exited our last position around 64.75 well before we got down to our. So this is resistance. This is support. There's our pivotal level. That was our short trade here in the ES today. Worked out quite nicely. Now you'll see, of course, again, if you haven't seen it before, if you're new to us, there is our specialized stochastic. Right? So when we get to a key price level and our modified stochastic turns green, we know that we are in short selling mode. And we can see here that the market bottomed out down here. Our stochastic was turned red. That indicates a bounce is forthcoming. We want to flatten out. If a trader wants to go long, terrific. We can see that we bounced up beautifully. Here again was the market topping out here. This afternoon, I shorted the market up here at this level at 90, simply to come back down to the pivotal level of 79 to 80. Worked out quite nice. Again, Kevin and a few others messaged me this afternoon. They were long from 80, asked me what I thought, and I said, terrific. The market's going to firm up here and look for it to advance up to our levels, 90, and best case scenario, 95. The market should not close above 64.95. And here they are pressing right up against right where we shorted the market this morning. So again, how can we know? This is some good technical information. This is not guesswork. This is very precise analysis of important prices. We can see here the market operated beautifully off of it. And we trade according to those technicals. Now, again, if I don't honor the stop, all right, if we don't honor the stop to this trade, then we're dead. But we have to be willing to know where that stop needs to be. There should be no bar. As I said this morning, the market should not close even a 5-minute bar above 64.95, and it did not. And here, as we approach to the end of the day, now we're going into the close. I don't short the close. I don't play those games going into the end of the day. 64.95 is still resistance. Notice all day long, there's been no close on any bar above 64.95. So interesting. That's a very difficult number. Now, that said, the market has done some very important things here today. It's going to be very interesting what transpires here as the market closes and as we go into tomorrow. There is the chance that in tomorrow's session, we find ourselves up at 65.09 to 65.10, making another high. Going to be a very interesting day tomorrow. But technically speaking, this is where we shorted the S&P here today. Let's go over to the NASDAQ for just a minute. Let's find that trade. Here's Ultra, what transpired with the NASDAQ today. Now, we were actually trying to short the market just above this 2400 level. This was typed into the daily levels. If you are in our Discord server, you would have access to those daily levels. And we can see 24,000, the market ran right to the ultra level. These lines are not after the fact. These were all there early this morning. We can scroll over, scroll over. These were all generated early in Globex. Way back, we have these levels that kick in. For those of you who don't know, and there's the perfect resistance level, and the market came right back down here. So beautiful. And again, you can see the conditions. The stochastic was oversold. We hit a price level. We were in sell mode, and we covered it here, or instructed traders to cover it here. Truth of the matter is, we took a beautiful short here this morning, first thing at 955, the price of 23,955. Our first short trade actually today in the NASDAQ was right here on this bar. We shorted that for the pullback simply to 915, 916. So we took a nice 30, 40 point trade in the NASDAQ on this bar here for this pullback down to here. That was actually our first NASDAQ trade of the day. And you can see how they came out of the pre-market and ran straight up. But again, this is not here. I'm not here to pitch you on the indicator or any aspect of that here, just to talk about trading in general. But this is what good technical information looks like. And as you'll see, 64.95 is acting. What is it about 64.95 that it's resistant? First of all, it's attractive to the market. We can all see the market got sucked right back up to it again, 64.95, but they also can't get through it. They can't get through 64.95. So there's a quality to that price. That price has different meaning than most other prices on this chart. There's something about that you could know why 64.95 does what it does. All right. But as I said earlier, and I want to again emphasize the point that having all the technical knowledge in the world can't save you from yourself if you lack the patience and the discipline to do this right. And you have to take that business approach. What would you do if you're opening up your business on Monday morning? I don't care what it is, a retail store, a restaurant, a service business, any other type of retailer. How would you approach your business? All right. You've got to approach trading just like it's a business and show it the same respect. And, you know, part of the problem with the prop fund business is that it makes it look like a video game. All right. It's all play money. It's not real. And it's too easy to hit the reset. It's too easy to buy a $15 or a $25 eval and start all over again. But let's face it. And again, I don't mean to sit here and beat you up, but how many traders, how many times have you said that to yourself? Well, all right, I got to reset it again. No big deal. It's 24 bucks. I'll do it again. Honestly, tell me, how many times have you said that to yourself? Aren't you, if you're sick of it, if you're just sick of saying, hey, all right, I'll start all over again. I'll start all over again. At some point in time, you got to tell yourself, I'm done with starting over again. I need to do this right. And in order to do this right, you need to be beat up. Okay. And here's the beauty of it, Scott. Okay. That nobody in this business, trust me, nobody who claims to be successful in this business didn't get beat up. Okay. I, I'm telling you right now, very few people on a retail business, what we call the retail side of this, small average traders have been beaten up as bad as I have. I've taken my licks. Trust me. And at some point in time, you either stop or you say, I'm done making the same foolish mistakes over and over again. I want to surround myself with people. I want to be in an environment where that's a thing of the past. Manage the risk. Don't over leverage. I know it's simple to say and it's hard to do. All right. You've heard the saying, surround yourself with successful people. In sports, I raised an athletic son. I was an athlete myself. Like I said, I'm 64. My son is now 31. Um, Multiple sport athlete. I always wanted him to play up. He always played beyond his years. He played on teams he played baseball at the age of 15 with a bunch of 18 and 19-year-olds. And it elevated his game. And, athletes like to play up. We like to be challenged. When I was running, I always wanted to have someone in front of me. I always did better chasing somebody. I wanted to be around successful people uh, in sports and in business. Be around traders that are successful, not just financially. Okay? Success does not have to be defined in trading solely by how much money we make. What's wrong with defining success, Scott, in trading by simply doing things right? Let's think about that. Isn't the first step to profitability, the first step to success as a trader, doing things right? Doing it the right way? Having good technical information, learning something about the market, not just buying junk because it seems simple or easy, all right? But taking the time to learn something. Why is the market attracted to 64.95? Why does the market want to do this? What's so important about 64.80 to 64.82, 64.77? Now, those of you who are in my gang, all right, and there's many of you who have been trained here by me on this technique, right? For those of you who have not, there's something very important about the price of 64.78, right? 64.78, something happened today at 64.78, thereabouts. I'm roughing it up, all right? 64.78 is sitting down here, isn't it? Right? 64.78, 64.79, right? Maybe a little bit. Yeah, probably a little bit more than that. All right. But we took out today's highs just now. And there's a number in here that indicated that that is what is going to happen, that the market is going to take out today's high. That number is not 78, it's something else. 78 was important yesterday. There's a number in here that's important today. So part of this whole G level technique is understanding when the market is going to take out today's high or take out today's low. And we knew this morning that the market would take out or attempt to take out the morning low. It did not do that. The morning low is sitting over here. We didn't take out the low of the day. The market got back above a level, and now we are taking out the day's highs, the morning high. That is part of the G level technique. It's very interesting. Okay. But again, I just want to reiterate that having all the technical knowledge, many of the guys here in this room right now know what I'm talking about. They understand these price levels, but some may still struggle to do things correctly. You can have technical knowledge. I continue to say you can have all the technical knowledge in the world. I personally have everything I need to know about the markets. There's about three things that anybody needs to know about the market technically to be successful. I know those three things. And yet, if I don't manage the fear, the greed, the emotions, have the patience, have the discipline, and trust the work, if I don't do that correctly, all that technical information does me no good. I have to put the technical knowledge together with the mental and the emotional side of the business. So again, I would suggest to you, success starts by doing things right and committing to yourself and someone else perhaps in your life, committing to changing things, to doing things the right way. And it's not just about having good technical information. It's about trading correctly, leveraging correctly, trusting the information, patience, discipline, waiting for the proper setup. Somebody here wrote in a little while ago, I always end with a loss when I choose to chase, but if I wait and enter at a certain level, I end up with some profit. All right. That's a very true statement. All right. If we let the market come back down, so we see this type of movement here, right? This is what we call the golden goose, right, guys? The market gets above a key level. There's a failure point here. We can all see it at the pivot. That's a failure. The market gets back above the pivot and closes above the pivot. This is a signal right here, in case you don't know. This right here is a bullish signal that the market is going to run up to 87 to 80 to 90. This is where the market's going to go once it sent you the signal. Do you have the discipline and the patience to put the trade on? Now look at 95. Look at the effect of 95 while we're talking. As I said, they're going to be attracted to 95. The market should not be able to stay there. It's going to get rejected by 64.95. Look at what just happened. It's not a random number. There's something about that particular price. Now, again, here's a technical, beautiful setup that says, hey, the market now is going to move up, run, if you want to call it that. Took several 5-minute bars, took probably a good half hour, 40 minutes, but it's going to go up to 87, which is critical today. All right. And guys, when they got above 87, where are they going to go? They're going to make a new high of day. This is the price that said, hey, if we can get above and sustain above 87.75, the market's going to make a new high of day. And lo and behold, there it is. And then we just broke back below 87.75. And now the market is attracted to the pivot, right? But here is a technical trade. It's a long signal. Could you wait for it? We didn't get long down here. There's a long signal up here. We cross over, we test it, we firm on it. Can you trust that trade? We're long and our target is here. The reason to be long is the market closing 5 minutes and 15-minute bars. This is a 15-minute close above the pivot level. That's a bullish signal that the market's going to run to our ultra indicator levels of 87, 75, and 90. Have the patience to wait for that kind of trade setup. You can see the failure point here. Notice there's no bar that closes above the pivot. That's bearish. Once they close above the pivot, they're bullish. Wait for the setup, take the trade. Exit the trade, be done. That is that trade. If you took this trade this morning or you took this trade this afternoon and exited up here, that's your whole day. How many traders here today, other than the guys in the room following me, how many traders, and be honest, how many of you can enter a trade and hang on for 10 points? How many of you routinely get 10 points out of the S&P? 30, 40 points out of the NASDAQ, 50 points out of the NASDAQ. Can you do that? Do you want to do that? Success starts by committing to yourself to do things right. You don't define success to start by saying, hey, I'm going to make $100 a day. I'm going to make $500 a week. I'm going to make $4,000 a month. That's the end result. That's the end result of doing things right. Steve just sold the 95s. I don't blame you, bud. That's a sell every time they get there. It's hard to trust when they're pushing up and you look like you're getting in front of a moving train, right? It's like, do I really want to sell that again? Yeah. Until they close above 64.95, you sell that. And they'll want to come back down to 87.75, which they've done. They break below there. They want to come back down to this 81.80 level. All right. Just a beautiful failure at the same place we shorted the market at this morning. So again, we've been here for an hour and this is going to be a regular series. So we'll pick things up I invite you all to come back. It may be next week. It'll likely be the week after. We'll do this every couple of weeks. Do you have any questions I can address before we wrap up today's session? Most of you here already know what we do. You've been taught, you've been trained. Some of you are in the room each and every day. Some of you are not. Some of you are brand new here. But again, here's your indicator at work. If you have the indicator and are struggling to use it correctly, let me know. If you've been trained on the G-level technique and you're struggling, let me know. If you can be in the live trading room, it's going to be very beneficial to do so and be in the live trading room. That's where you're going to learn so much. Again, I'm going to encourage you to think about success. Success begins by doing things correctly and committing to yourself that I am going to do things correctly. And that means having the patience and the discipline to wait for that entry. If you don't know where a good entry is, then you need better technical information. If you don't know what a good target is, then you need better technical information. If you have good technical information, I mean really good technical information, not some silly idea or some silly concept. But if you have sound technical information, but you're still struggling to be consistent and to be profitable, then you have to go back to the foundation of I'm not doing things correctly. I'm lacking discipline. I'm over leveraging. I'm emotional. And you have to break the cycle. The last comment I want to make is success breeds success. Failure breeds failure. The more you fail, the more you will fail because you can't break that cycle. You can't be successful and consistent and profitable because you're so used to failing. We have to be successful, and it begins by doing things correctly, having good technical information, and building small. And being profitable, it's not about dollars. It's about consistency and being able to look back and say, hey, I am 85% successful. 85% of my trades are correct. 80% of my days are winners. 80%. And if you are correct 80% of the time, then you will have 4 winning days out of 5. You'll have 4 winning weeks. You won't have a losing month. And you'll be on the road to profitability. The road to success starts by having a quality business plan and executing the business plan and doing things correct. If you need help with that, let me know. Reach out to me. I'm here for that. Right? Yep. Owner says, I just want to say something. You can make all the money you want, but what G is saying is, can you keep it? That's the hard part. The hard part, again, is we can find winning trades. Can you stay consistent? Can you manage the setback? Do you give it all back? You have to make a decision. I'm done with giving it all back. And if you need someone to hold you accountable, if you need that coach in your corner, if you need that mentor, then that's what you need. If you don't have it, find it. Doesn't have to be me, but it needs to be somebody, a sounding board, someone to talk to, someone to communicate with. There's so much more to this business, and I know you know this, than just technicals. Hey, buy it here, profit here, take your exit here, put your stop here. All right. And again, good technical information does not guarantee trading success. I've seen it time and time again. You can still blow all of it by just not doing things and honoring the plan and not having the discipline and the patience. If you cannot, at some point in time, develop those skills of patience, discipline, et cetera, then you have to do yourself the favor and stop trading. Okay. If your platform allows you to lock yourself out, then do it. Shut it down. All right. Again, you can't listen. You know, and some of you know this, and I don't say this, this is not to brag. Okay. This is not meant to brag, but I've traded up to 350, 250, 300 mini contracts at a time. I've traded in pretty sizable positions. And I've been very successful with it, and I've been miserably, I've failed miserably with it. All right. And if you're going to trade in size, you better eventually learn how to do it right. And you can't trade 10 micros unless you can trade 2 or 3 correctly. Trade 1, trade 2. Do the right thing with 1 or 2. Prove to yourself that you can have the patience and the discipline. Don't care about the dollars. You made 50 bucks. It doesn't matter that it's only 50 bucks. You made 10 points. You made 12 points. You had 6 winning trades. You had 10 winning days. You've had a winning month. You've done everything structurally correct. Then you can graduate and increase the size of the position. You need to train yourself to do things right. You can't trade 3 minis if you can't trade 3 micros. You can't trade 3 micros if you can't trade 1. Just because you have an account that says you can trade 6 minis doesn't mean you've earned the right to trade 6 minis. I'll give anybody here $25,000 in cash to put in an account. You can trade as much as you want. You haven't learned how to do it. You haven't earned the right to trade in that kind of size. You haven't conditioned yourself. Who starts out saying, "Hey, listen, I'm going to start jogging. I'm going to go run. I'm going to get in shape and I'm going to run." Do you decide day one to go run 10, 15? Do you run a marathon day one? You are not prepared to go run a marathon just because you go out and buy expensive shoes. You have to condition yourself physically. You also have to condition yourself mentally. I was a long distance runner back in my young days. All right. I had the physical ability to run. I did not have the mindset for it. I could run like hell 2 miles, 3 miles, 4 miles, 5 miles. I could not. I hated getting beyond that 5 mile mark. I never could run a marathon. I didn't have the mental capacity to do it. I had the physical ability to do it. I didn't have the mental capacity to do it. It's different. Trading 3 micros should be the same as trading 3 minis. Should be the same as trading 30 minis or 100 minis. It's just math. It's just a number. But yet psychologically something goes kablooey in your brain when you start looking at the profit and loss on 100 lot. Trust me. And if you're not disciplined and if you're not doing things right, you can't do it just because you have the money to do it. And so again, I say all that to say just because you can open a prop account and trade 10 micros doesn't mean you should. Or you can trade 20 micros doesn't mean you should. Do things correctly. Get the foundation under your feet. Do things correctly. Get good technical information. If you want good technical information, come see me. We can talk about good technical information. I offer a number of different training programs, G-level work, inner circle work. I have plenty of technical knowledge to share with people. But at the same time, all of that is useless if you can't create the structure of patience and discipline and a sound business plan and a strong mindset to execute that technical information. Does that make sense to everybody? Hopefully if it speaks to one person, whether you're already in my Gills gang, whether you're already trained, or whether you're brand new and hearing me for the first time, it doesn't matter. All right. Surround yourself with successful people. All right. Be around someone or people. Again, stay in your lane, have your own patience. You'll get there at your time. Okay. This is not a competition. I don't, I don't like to be in a community where it seems like it's a competition. Someone's trying to do better than the next guy or bragging about doing, you know, it's about mutual support, mutual respect for each other and trying to help each other and show the way to do this. All right. Admit when you're failing, admit when you're struggling, you'll get help. All right. And find the support around you from people who have figured it out, who have mastered the demons. They're willing to support you. They're willing to help you. Reach out to them. I know that they'll help you. I'm willing to help you. But first and foremost, if you don't find that you have good technical information, get it. If you feel that you've gotten it from me and it's not working for you, then talk to me. If it's emotional and it's psychological and it's the mental side of things, then talk to me. We'll work something out. But again, last thing, I just want to beat the dead horse. Success does not start and is not measured by being profitable. It's by looking in the mirror after the trade is saying, "Hey, listen, I took a trade I stopped out and I lost. Did I do things correctly? Did I do everything right in that trade? If the answer is yes, then you can live with the loss, accept the loss, and move on. It's going to happen. You can do everything right and still have a losing trade. I have them. You're going to have them. There's no shame in that. It does not define you. I had a winning trade. Did I do it right? Yes, I entered correctly. I had my stop in the right place. I managed the trade correctly. I had a winning trade. Great. That's the road to success. What about, hey, you managed the trade in a piss poor fashion, pardon the expression. You did it all wrong. You entered at a bad spot, you added, you over leveraged, you didn't honor your stop, but the trade worked out. Good for you. It's going to destroy you in the end. That's not good. That's not something to be proud about. If you had a winning trade that was completely wrong, you got lucky. And that's not going to serve you in the end. That's going to come back to bite you in the end. And I think you all know that, but I just want to put that out there. So I'm going to wrap it up. I appreciate every one of you being here today, making this a nice, successful webinar. The recording will be uploaded tomorrow. Appreciate your input. Thank you, David, for being here. David, if I can help you in any way, shape, or form, please reach out to me. Love to have you back in our group if you can, and really begin a successful journey and get things, create a foundation of success begins by everything I talked about and getting on the right road. And I'd love to see everybody reach their level of success as you define it, not as anybody else around you defines it. How do you define it? And let's be successful. Let's get everybody doing things the right way, managing all those aspects of trading. In the end, the money will come. I don't like to talk about money and profits. I like to talk about doing things correctly, having success, managing all those mental and emotional sides of trading, doing things correctly. Everything else will fall into place if we just do that. Yes, we need good technical information. I have that. If you need it, you know where I am. You know how to find me. All right. I look forward to more. And please give me your suggestions. Send me message. Tell me what you'd like to hear more about in our next webinar. This will be an ongoing series. They'll be posted on YouTube. They'll be posted in Discord. And tell me what you'd like to talk about. And I'm happy to address that. So again, I thank you, each and every one of you. Thanks for being here, everybody. If you couldn't attend and you listened to the recording, thank you for listening to the recording. And you can reach me, Gil, on Discord, and I look forward to helping you. Okay. No problem, Sam. Nice to be here. I saw you come in late. Anything I can do to help you, you let me know, reach out. And that goes for each and every one of you here. Thanks for listening. Thanks for being here and participating. I'll see you next time. Take care, everyone.